Investors and traders, do you want to gain a better edge in predicting market turning points? Have you ever wanted to know where price is going to next? Do you wish to get rid of the anxiety and often sheer terror of not knowing where price is going? To answer these questions, you need to understand how smart money buys and sells. Counterintuitively, market movers and smart money don't just buy or sell at a single point. They strategically position themselves, buying at multiple safety nets and selling at various ceilings. It's all about layering in and layering out of positions with precision. The CTKS method uncovers those precise levels so that you can see what remains hidden for retail investors and traders. In this video, we reveal smart money levels on charts across stocks, commodities, forex, and crypto to help you think and act like smart money. Let's run the numbers. Rule 4. Price moves in waves. Price is always going up and down. It goes down in an uptrend and it goes up in a downtrend. Across the crypto market, which is the most risk-sensitive financial market, we saw really good green. This is an example of price moving in a wave. Before we get into the video, I would just like to express our deep gratitude for you being here. Very soon, we're going to celebrate our 1000th community video. Wow! If you'd like to be part of the celebration, please leave a comment on YouTube. About 3 days ago, we predicted that we might get a turning point inside the crypto market, and we've seen exactly that. Of course, it also applies to the stock market. The point of maximum fear is typically the point of maximum opportunity. If you had the courage to act, congratulations. And if not, you'll get there. Inside the masterclass, we do deep dives across economic systems, and in TM6, you get my live chart. There are 4 things that really stand out in this analysis of the 8. We saw the VIX, the fear gauge of the market, drop down, oil prices drop down, yields drop down, and the dollar spluttered. This placed fantastic momentum into the markets, into gold, into crypto, and into bond prices. And as a result, we saw risk-on appetite re-emerging into the market. As we are synchronized between Tier 1, Tier 2, and Tier 3 charts, we know that alts and Bitcoin cannot escape the stock market's gravity, and that's exactly what we saw. Bitcoin came up, dragging Ethereum up, Binance Coin up, XRP up, ADA up, Doge, Solana, and Tron. You must be very careful listening to story-based analysis, that is, people's opinions. Instead, look to the charts. As a smart money community, we look at the strategic buy and sell levels, all of those safety nets and ceilings on the Tier 1 charts, the engines of financial markets globally. We cross-triangulate that with the Tier 2 and Tier 3 charts. And you can see when you're in synchronization, you can do very, very well. Yesterday, we asked the question for active learning. Did you think Tesla would go up or down? Let's zoom in there and have a look at the smart money levels. Smart money always buys and sells at multiple levels. We saw Tesla do a big push, a lot of risk-on behavior, found a consolidation base around that 233 mark. It managed to stay above the 228.51 smart money buy area, gravitationally attracted back to this very, very strong level. Smart money have a very, very simple rule. If it's not going below an SL, it's going above the SL. If it's not going below, it's going above. And we can see resistance here at that 236.35 mark. Also, resistance playing out at the 238.95. And look at post-trading. It's gone nuts. And post-trading does that. We also asked the question yesterday on Microsoft, are we going up or down from here? Again, let's pop on the smart money sell and buy levels. Microsoft has an absolute barrage of support, smart money support, below that 315 level and also around the 316.34 level. We saw that price came down to that smart money buy area at 321.62, and what did it do? It just sprinted up to the next smart money sell level at 329.05. It didn't have enough force or power to get to the 329.96 mark, but it closed out at 327. The rules are very simple when it comes to SLs or Stanfield levels. These SLs are drawn up from all of price history since 1986 for Microsoft, using the CTKS method's objective dynamic market structure. These particular levels are very, very significant to smart money. This is where smart money looks to lean in and to lean out. If you know them, you can make a lot of money. We also asked the question, do you think Nvidia is going up or going down? And let's look at the smart money levels to understand what's cooking inside market structure. We saw Nvidia just screaming up through smart money sell levels, and these are very, very strong. We found that Nvidia found smart money support at 454.96. It managed to get over the very serious smart money sell level of 460.73, made its way up to 466.50, and you can see it's being supported, but has not yet got above this 473.38 mark. Nvidia closed out at 471.15. Individual market structure will play out on the charts. You'll often see a very big difference between the chart behaviors of different charts. This is because of market structure. Nvidia will report after the bell. Where do you think Nvidia is going to next? It's very important to know where the smart money ceilings are and the smart money floors are. Smart money doesn't guess, it knows. We know that the market commentary right now is around the US 2-year, the US 10-year, the 20-year, and the 30-year yields. They've been spiking up, and what did we see with the US 2-year yield? It decided to decay, but it always decays inside market structure. Smart money's very simple rule: price moves SL to SL, Stanfield level to Stanfield level. We saw that the 2-year yield couldn't get above this particular resistance up there. What does that mean? If it can't get above, it's going below. And we saw the 2-year yield just hover around that 5.009%. It couldn't get above, it certainly tried, but it was coming below. And what does that mean? Safety nets, catch price. This is what smart money knows and retail doesn't. The safety nets are your best friends. If you know where they are, you're protected because you have knowledge. If you don't know where they are, you will think that price in any chart is going to zero when it goes down, or in any chart when it goes up, it's going to infinity and beyond. Yesterday, we looked at the US 10-year yield. It's obviously come down, but there was already a weakening of structural levels around here, and this loss of structure around this area just foretold that the US 10-year, the US 2-year were coming down, and stock markets would rally, as well as crypto and commodities. This is why it's so incredibly important to know where smart money is buying and selling. And if you would like this indicator to know where those smart money levels are, just pop across to the ctksmethod.org. Yesterday, we asked the question on the DXY, is the DXY coming down or going up? And actually, it did. All three. It came down, it went up, and then it went back down again. Why did it do this? The answer: CTKS structure formed through the CTKS method, looking at objective dynamic market structure. When we looked at the DXY, we knew it was on a very nice area of smart money buy support at 103.49. It did a fake out, but look at all this smart money resistance. The DXY didn't have a hope of breaking through that. And what we saw was a natural repercussion of hitting so much selling resistance that there was a short liquidation followed by a long liquidation. Right now, there's currently negative momentum on the DXY. If you were looking at the chart like this and didn't understand that smart money layers in and layers out, they're always looking at CTKS structure, you would not know where the DXY could go to and what encountering of resistance it could have. One very dangerous thing that retail does, it only trades the chart that you view. If you're retail, this is a very, very dangerous thing to do, because smart money moves are all about structure. To understand structure, you must understand the smart money buy and sell levels on tier 1, tier 2 and tier 3 charts. 3 days ago, we talked about the potential of the market bottoming out. Traders are exceptional at picking turning points in the market by stacking probabilities. They don't always turn out, for sure, but they turn out more than they don't. If you're in the crypto market, you say, I have no interest at all in the stock market, yields, Tesla, Nvidia, I couldn't care less. I just want to go and cuddle my beloved alt. Your beloved alt cares about Tesla. It cares about the US 2-year, the US 10-year. It cares about it all. And when you get synchronized, when you start to see what is occurring underneath the hood, inside the engine of financial markets, the veil is lifted, the confusion and the fog clears, and you can get synchronized. The market pays you only for your synchronization. If you're desynchronized, you pay the market. Crypto even cares about good old dollar yen, and when we looked at dollar yen in yesterday's video, we said where could it go? We knew the dollar yen had substantial smart money resistance above it. The US 10-year was already breaking down. The US 2-year was likely to follow, and we'd already seen a turnaround 2 days before that in the major indices, a potential bottoming action. All of this would have led you to believe that the markets were in fact coming up, that the DXY would fall. And that doesn't mean that they can't rally before they fall. There's always typically a fake out before a breakout, either to the upside or to the downside. What did we see occur with dollar yen? It couldn't get through this very steep resistance at 146.45. Where did it come back to? If it's not going above, it's going below. What's going below mean? The SL, the Stanfield level below. And we can see that at around 145.58. Then it just had a lot of negative air. It couldn't make it. If it's not going above, where's it going? It's coming back down. And if it can't get above, where's it going to next? The smart money safety net levels. If it can't get above, where's it going down to next? Especially a lot of structure. And you will find time and time again, CTKS structure is an absolute game changer. You're now thinking like smart money. And smart money doesn't even conceive of one support level. There are multiple safety nets and multiple ceilings. Only retail thinks one safety net and one ceiling exist. This has plainly never been the case. I'm incredibly proud of our global family. What an incredible group of people. When we look now turning to crypto, when we look at Bitcoin and throw on our smart money indicator, what do we see? In the last trading session, Bitcoin could not get below that smart money level just down here at around that 25,344. If it's not going below, it's going above, which means it's going to ping back to the 225,766 mark. If it can't get above, it's going below. But when we see positive momentum, that is, the buyers have stepped in and price has not made its way back, that shows us buying power. When we get these pushings up, what was this caused by? You got it. The US 2-year, the US 10-year, the DXY, all capitulating, and the stock market just going for it. If you understand the intercorrelations and interdependencies, you will make a fortune from financial markets. If you don't understand it, you'll be terrified buy them. What can we see? Even though we got above this one, it just goes to the next. And we've seen a pushback on that 26,564 level. It's trying to get above, but not making it up to 26,895. It's coming back and trying to consolidate around that 26,569 level. Bitcoin is currently 26,603. If you had synchronization with the Tier 1, Tier 2 and Tier 3 charts, you would have been able to spot this price action inside the market. If you've been following social media recently, you would have noted that a lot of negativity has come out against Binance Coin, BNB, the token that actually locks in fee discounts on the world's largest exchange. Now, what happened with Binance Coin? The simple answer, CTKS structure happened to Binance. What is CTKS structure? It's the smart money buy and sell levels or Stanfield levels mapped out through the CTKS method. How do you see them? Well, you pop on your indicator, or you can mark up and learn the CTKS method inside the masterclass or inside ctksmethod.org. One thing that a lot of commentators were not talking about was this. There was such substantial smart money support below Binance. It had a ton of smart money buyers and also had a very well respected 207.20 smart money buy area. There was so much support around this particular area, it didn't come down to the next smart money buy area, which was a weaker one at 201.60. A lot of people actually inside the community, inside our community, leaned in to BNB, understanding what was happening with yields, the dollar, especially the US 10-year, through a lot of signals. And they've done very, very well. The concept is when you go through multiple levels of smart money sell resistance, you are going to get pushed down until you find support. Up and down, until you turn all of this resistance into support. And that can take a little while. If you want to lose money, I found the best way in nearly 4 decades of trading and investing inside financial markets. Listen to other people's opinions. If you listen to the chart's opinions, you listen to where smart money is buying and selling. You become independent of the goodwill of other people because, of course, they just want to help, but they don't know structure. And 95% of people who are commentators are retail in nature. That means they're terrified when price goes down. They're not excited at all. And when price goes up, they FOMO. They're on the wrong side of the percentage, and something that we talk about all the time inside our smart money community. A lot of people love Ethereum inside our global family. Now let's just zoom in here a bit and look at the structure of Ethereum. Where is smart money buying and selling? If you're a member of the CTKS method service and the prices are going up at the end of next month, so just to let you know that, you can throw on this indicator and 26 others and see where smart money is buying and selling. If you were in Ethereum and saw Ethereum coming down to this incredible confluence of smart money buy areas, you would be leaning in. And the beautiful thing is that you can mark up your own charts with the CTKS method, and I really suggest that you do that as well. A very dangerous thing that retail does, it is very unrealistic when it comes to percentage returns. When you get, or could get, around 7.6% return in under 24 hours by buying Ethereum, that is a very, very good return. And we need to compare returns to what we would get inside the bank, money market funds, and other comparable investment vehicles. A lot of people get into crypto with a retail mindset. I'm going to become a billionaire because I'm going to buy something that's so dirt cheap and I'm going to buy a lot of it. It just will make me wealthy. I'll just buy it, just forget about it. Come back in a year's time and it will be worth $500 million. That could be the case inside crypto, but there's a much, much better way of doing it. That's to know what you're doing. You don't need to make big percentages to make big percentages, and I've done many videos on that. In the comments today, please let me know your view. Do you need to make big percentages to make big percentages, or making lots of little ones is an absolute game changer? Please let me know your thoughts and your comments. In the daily channel, there's just no opportunity to cover these 27 smart money buy and sell level charts, but looking at the tier 1 charts is incredibly important to you. You can see the signal that the US 10-year yield actually through yesterday indicated where things were going in the next 24 hours. That was then confirmed by the US 2-year yield and the rallying of various stocks and also crypto. Smart money does everything they possibly can to get synchronized in with the market. They know that when they're synchronized, they get paid, but if they're desynchronized, they pay the market. The crypto market is highly dependent on the health and strength of the tier 1, tier 2, and tier 3 charts. If you don't know where smart money is buying and selling, you're just guessing. If you're guessing, you run the probability of incredible anxiety and being terrified. Smart money knows retail guesses. And when we look at the greatest gainers in the past 24 hours, they are SUI, DYDX, ASTR, ASTAR, WOO, ICP, Injective, Solana, FractShare, and Stellar. The greatest losers past 24 hours, top 100, Monero, Immutable X, and now we see stablecoin, 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 stablecoin. You get the idea. What does this actually mean? It means there was such a chaotic broad-based rally that the greatest losers were actually stablecoins. Stablecoins remain fairly pegged. They're not that stable. You can see just these charts over the last 24 hours. Stablecoins, they're not stable. Last 7 days, they're not stable. Last 30 days, they're not stable. They do fluctuate, but they don't fluctuate that much. So what you see is when we look at the greatest losers in the past 24 hours, top 100, that's showing there's been a broad-based buying frenzy across crypto. Just as Bitcoin cannot escape the stock market's gravity, the alts cannot escape Bitcoin's gravity. If you know what Bitcoin is doing, if you know what the stock market is doing, you're ahead of 95% of other investors and traders. Currently, the alts are doing very well, and we would expect that because Bitcoin is just breaking above its short-term base. When you know where smart money is leaning out and leaning into a trade, you can trade with much more confidence. And learning the CTKS method, which helps you to see where smart money is buying and selling, is very important because you gain first-hand experience in marking up your charts. Marking up your charts is incredibly important, but understanding how all the building blocks fit together is even more so. To help you to gain access to the masterclass, which is a premium Rolls-Royce level masterclass on the CTKS method, Purpuratum has offered a CTKS partial masterclass scholarship. Thank you, my friend, for your very kind generosity, and you can apply for the scholarship in the links in the description of this video. The masterclass is all about your understanding of the CTKS method. Like Claudia says here, it will help you go from zero knowledge or just a little knowledge to very confident knowledge. And there's a lot of people who have been trading for decades and decades who have done the masterclass that have found it an absolute game changer. The active learning questions from yesterday were designed to help you to see the US 10-year yield was actually weakening and what that could have caused across the board. When you do active learning, when you invest your time and your effort and your energy, you start to ask questions that you would not otherwise ask. For the active learning today, please go through the Tier 1, Tier 2 and Tier 3 charts and see if you can figure out where the markets would be going in a likely basis tomorrow in the next 24 hours and why. As smart money investors and traders, we're never caught off guard because we know we control the trade or investment, but it's the market that controls the return. Therefore, we estimate what the markets could do in the next 24 hours, how it could hit our portfolio, and how synchronized we are with the Tier 1, Tier 2, and Tier 3 charts. Yesterday's video was a very practical video to help you to raise your synchronization, not yesterday, but today. This is the power of active learning, and you will find it incredibly useful to you. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.